an individual must have the canceled checks. So an individual landlord, private party landlord, you have to have the canceled checks to go with it. And a family member has to have the canceled checks to go with it. So on an FHA loan, on a USDA loan, it's a little bit different. USDA loan, they'll take the VOR, no questions asked. Or just the form with no canceled checks. But the reason why on a USDA loan, they actually require a VOR on every single loan with the score below 680, whereas FHA does not. FHA doesn't have a rule. So imagine how many people would be disqualified for a loan, David, if they didn't have canceled checks to go with their VOR on a USDA loan. It'd be quite a few, because they wouldn't be able to do it. You know, not everyone pays by check, so it'd be a lot of people, because USDA has a specific rule. Anyone under 680 has to provide rental verification. They have to. Or if they're not paying rent, if they're living rent-free, they have to sign a letter stating that. But on an FHA loan, the rule's a little bit different. And it comes into play when you're trying to use it to add a positive to the loan, okay, to offset a negative, right? So you have marginal credit here. We're going to try and get a supplement. I think it's a company he pays rent to for this guy. And the verification we get from Funding Suite would be sufficient in itself, right? Any questions? No?
I have a question.
Go ahead.
So if it USDA, if it's below the credit 680, below 680, and then the individual can provide just the cancel rental check. He doesn't rent it through company, through third party. Will it work for us?
I don't know, maybe if he has a lease agreement to go with it. Why can't he
No,
get a VOR? A VOR?
For example, he doesn't have lease agreement. Just he was paying to an individual, let's say for 12 months.
Did the individual fill out a form? No? I probably would just say 0. Depending on the loan, I would probably just say it's not paying rent.
Okay.
On the money orders on the FHA loan for rent that Jason asked, you would need 12 months of bank statements showing the withdrawal each month that lines up with the money order. That's very hard to do. So don't send a loan in unless you verify that first. That way you get the bank statements and the money orders receipts, or at least seeing that the withdrawal's coming out for the amount of the rent. The odds of that happening is not likely. So a borrower says that and you're trying to add it as a comp factor, you got a marginal credit loan, you want to use gift funds, and then you want to use rent with money orders, that's a tough deal. So I'm going to send it back to you, make you fix it. Okay. Now I want to give you an example of a good credit profile.
Can we do one more bet on?
Yeah.
I just pulled one this morning, or right before we started our meeting at Denton, Michael Denton.
Let me show them this one real quick, and then we'll go into Denton. This is Brittany Mays, Nick's first loan. But this is this person has good scores, right? 700s, those are good. Even so, you know, the high 600s are good. You know, 650, it just really depends on the profile. The score itself sometimes isn't really an image of just the profile, because they could have accounts in dispute, artificially inflating the score. Look at this report, all these trade lines, look at the time on this, right? How many months? 97 months, 36 months. I mean, this is solid. This is when you know you got a deal. Just look at compare this report to the other one. The other one's going to need work on structuring. This hardly anyone can do this loan and not screw it up. Okay, because this person can get a gift. This person can have payment shock. That means paying 0 rent and the payment going to $2,000 a month. Because they're solid credit profile.
Low debt?
Huh?
Low debt?
Yeah, low debt. But that's the difference that you want to look for. So if you have marginal credit, you might need to look at other things to help structure the deal. Avoiding gift funds, right?
Yeah.
On marginal credit loans. USDA is not really you could have gift funds on a USDA loan, doesn't really matter, but I'm really talking about loans with down payments, like an FHA loan.
No, are you guys married?
What's the name? Denton?
Yeah, Denton, D-E-N-T-O-N.
You're not married in Texas?
I didn't didn't pull. I didn't do the tri-merge on it.
Okay, that's not your wife?
You didn't try merge them?
Nah, man, I just got it this morning.
Dude, the other two, we're rolling the dice.
Yeah, the other two are probably like 550.
We're rolling the dice.
Yeah, we got to roll for this.
This was a referral. Another bank denied them.
The numbers all work, and you can't figure out according to TransUnion. That's what you. That's what
Guys, so what do you wanna? What are we looking at?
Oh, just go over it like you normally would.
Okay.
I already glanced at it.
We got a couple of trades.
This is FHA on funds without being.
You want to see the pre-qualifying?
Somebody get him a head
So he's got auto loans 7 months, two auto loans, one for 7, one for 20, a disputed account with $11,000 balance. Just says dispute resolved. Ally Financial, that's a huge.
What does that mean? What a dispute resolved means that it's not in dispute anymore?
Right.
Okay.
$11,000 balance. So this is a huge thing you got to pay attention to. That auto loan right there could be a deal killer, even if you get approved on
Josh, on those, a lot of times if you only pull on one bureau, if it was from a long time ago, it'll especially in auto loans, it'll show charged off once you pull all 3 bureaus.
Right, he's right. So when you pull a single credit report, single bureau, you're not getting all the credit data. When you add the other ones to it, that account maybe it shows it as a charge-off, 0 balance. You know, you have to pull the other 2 to really get a solid picture. And you'd want to pull the other 2 on a marginal credit loan before you move forward with them, if they're willing to put in the work it takes to get the loan, right?
How long have you been at, Maryland Virgin?
So he's got some other collections. Let's see what else we've got. Some more collections. He's got a Capital One card for 6 months. More collections.
So he got his own funds to close, Danny?
Yeah.
Sure?
He's got a modified
Yeah,
mortgage.
The guy makes 80 grand, stable job, but
Loan modified.
Yeah.
That's a concern.
Keep scrolling down and they'll hit you with a surprise.
Oh, bankruptcy?
Now you see this collection is from an apartment, but he says there's 0 balance. This could be a concern on loans with marginal credit where someone has apartment collection. Those usually have to be paid off because it's a housing expense.
I see you buy.
Oh, child support too. Did you put that in the ratios, Danny?
They just touched that one.
It scrolls so fast.
Yeah, he's got it right here. See how it says payment is 0, and it's from 2009. Doesn't mean that's the case. Anytime you see child support on a credit report, you always got to go over on the phone with the borrower, confirm. Hey, you got child support. Is it resolved now? Don't assume that this information on child support is never right on the credit report. Okay, always assume it's wrong. But if you see it on here, you have to ask. Okay, you have to go over it on the phone with them and say, what's going on with child support, right? The case closed, the kid you're no longer paying. Just want to make sure we're on the same page because sometimes it has zeros on here. Very, very often it does, and they're still paying it, right?
Are you a first-time homebuyer? Okay, so
Danny hit the jackpot, man.
That's why I pulled the other ones.
Yeah, that's significant. What we call a significant credit event or derogatory credit event. You have bankruptcy, foreclosure, modified mortgage. I mean, this guy. I don't know what happened to the house, but I'd ask the guy if it was foreclosed on.
Yeah.
Or whatever. Probably was. So he's got a BK. A BK. Draw a line in the sand. If you see a BK on credit, there's a line in the sand right there, and you get a fresh start. You get a brand new life. Okay. After that, you cross that line in the sand. Okay. There's really no going back to your old ways of doing shit. But the problem is that this guy, after the BK, to the date of the BK 2009, this guy went right back into whatever the fuck up shit he was doing.
Yeah.
So the concern, right? The concern here, you got a significant derogatory event in 2009, and then he continued on having late payments, collections, had his loan modified, a huge auto repo. I'm sure he's got his reasons, and you can spend time listening to him if you want. This is not a deal, not right now. This guy needs to work on his credit. Did that help you, Danny?
No,
His answer right there, huh?
it was pretty obvious, and that's why I wanted you to bring it up.
Danny will give me that free qual letter.
She told me he was denied by another bank, and I'm like,
Free qual for 250, Danny?
huh?
Roll the dice, man.
No, they only want 140, man.
How much you putting down? 50%?
Is that any question on marginal thin credit and good credit and what you're looking at when you see it?
When you order alternate trades and it gets verified, does that get added to your credit report?
Yes, it can, or you can do it in a separate form.
So then does it count as a traditional trade?
No.
Yes, they check everything.
The
Go buy a house.
alternate credit does not get,
By Baytown.
alternate credit
Require,
is for alternate credit verification through a supplement from Funding Suite is for internal purposes only. Internal meaning Bank of England only. It does not get reported to the bureaus. It stays here at the internal level. When we download the report, it will show up, when we go back and re-download the report, that's well, we can see that those things added. And it has a special indication that indicates what type of trade it is. But when you run that credit report through DU doesn't, it's like it's invisible, it doesn't even see it. It has to be reported at the bureau level for DU to recognize it.
Is there a way to do that, to get those like alternate trades reported at the bureau level, so they count as from?
No, not, well, there was one thing that I think they were trying to do with rental, to get it added, one of the credit companies. I don't know if they, as a score booster, if you're paying rent, to get it added to your credit report,
Yeah.
you pay like $200 or $300. Maybe you got a loan now because of it. Helps it, you get them, but anyway, not
Not all like alternate trades?
No.
Property taxes and insurance is included into the house payment.
Any other marginal credit questions? Everyone know, understand, I think when you have a marginal credit, what are you going to try not to do at all costs on an FHA loan?
Gift funds.
Gift funds?
Gift funds.
Gift funds? On that gift funds, when you say gift funds, that's easy, right? That makes your job easy. That takes the thinking out of it. All right, gift funds, problem solved, no problem. But that's not how this business works. This business is involved, you get paid well for what you do. It's because you're putting in a lot of mental thought and guiding a consumer on how to structure a deal. So gift funds is not always the answer. And if the borrower doesn't have the money, you need to make sure that you're strict with them up front about it. At the time that you're pre-qualifying them. You know what I'm saying?
One thing I asked John earlier was I had a guy who he had a judgment and he was making payments on those judgments, and I was asking him if that guy is clear or not. That was the only thing that he had on his credit report that raised any flags.
Well, credit judgment's not really a judgment, or a tax lien is not really it doesn't make it marginal credit.
Okay.
No, we have a good payment history report. You don't pay.
He answered it for me,
but
just in case anyone else was there.
He does need a letter from the judgment, whoever holds the judgment, that they're going to subordinate to our mortgage. Which my advice is always to have the judgment paid off, because the odds of you getting the letter aren't very good. Okay. A judgment can take place, hold the spot on title for our property, and we don't want that. Okay, we don't want anyone else to come in on our place a lien on our house. Okay, we have our lien on it. And the thing about tax liens and some judgments, like federal judgments, can take someone can take priority over our lien, first mortgage. And once they take priority, there's people out there that do this for a living. They buy tax liens, okay, because they take priority over a first mortgage, forced to foreclosure. Lender gets, pay them up, paid off at pennies on the dollar or whatever. And the place ends up, the tax lien company that's buying the tax liens ends up making a pretty good profit. You know what I'm saying? They push the first lien to the second position. So that's why we care about them having a tax lien. Why do we care about having a tax lien on title? You didn't catch any of that. What are you doing? Facebook?
No, I'm making sure the video was recorded.
Okay. All right. Okay, so tax lien, why can't it be, who heard that?
First priority.
Because,
Takes
yeah,
first
they
priority.
have, yeah, the
It takes
priority
first
to
priority, so if a customer calls you and says, I don't understand why I have to pay this off, what are you gonna tell them? Priscilla, what are you gonna tell them? Huh? No, if they say, why do I have to pay this off? No other bank's making me do this.
Because there's somebody else that could come in and take over
The
that.
thing is that if I was you or I was.
Someone that can purchase a tax lien and then take
Push
first
you.
position, foreclosing the house,
Somebody's credit cards you have.
right?
Yeah.
Okay.
It's all
Yeah.
mistake, they're on mistake.
Yeah,
Wait, they can cause a foreclosure on the house?
yeah.
I wanna get you before.
That's why we have these rules in place. So you guys gotta take this down to simpler times, like where, you know, lending has been around since like the biblical ages, right? Money lending. It just all has evolved from that time. For the last, you know, few thousand years. Anyway, and we know what can happen. That's why those rules are in place. Now, borrower's going to tell you, no other bank's made me do this. That's just, they're just putting that out there to see if you're going to budge, to see if you know what you're talking about. And when you budge, you know, let me find out for you. I mean, no, I think we can do it. They're putting that pressure on you because, you know, either they're going to find out if you don't know what you're doing, making a promise to them, and then they're going to say, well, you know, when the loan doesn't close because of that problem, well, Danny said it would work. And, you know, I was like, well, and then I have to get on the phone with them and explain it to them. But anyway, you have to explain these to the consumer in ways that they understand.
Okay, I want to add something on that. Is this okay?
Yeah.
Mind if I do? If you guys are doing a couple things, if you're doing USDA loans, remember it's the total household income for everybody that lives in the house. So let's say that you're doing a loan for John Smith, okay, and John Smith's the only one that wants to go on the loan, and John's married to Mary. You need to know Mary's income too, because the cap for USDA is the total income cap for everyone that's going to be living in the home. So if John makes $50,000, and you just qualify just based on that, the income cap's 80, and Mary makes 52. Well, now you don't have a USDA loan anymore, because now you're at 100. It doesn't matter if she's not going on the loan; it's the total household income. Okay, so it's very important that you find out everybody that's going to be living in the house, everyone's income has to be below the income cap. This is a very important thing that you need to make sure about. And remember, if you're qualifying people with 2 jobs, they have to have a 2-year history of having 2 jobs concurrently. It doesn't have to do with the same 2 employers, but there has to be a 2-year history of having 2 jobs. Does that make sense?
Mm-hmm.
They have to have a 2-year history of having 2 jobs. Those are big things that, there's a couple other things I want to talk about too, but those are some of the things that came to mind.
Meaning 3 jobs is. What do you mean having 2 jobs?
If somebody works 2 jobs and you're using 2 incomes to give them the loan, to qualify them, they need to have a 2-year history of working 2 jobs at the same time. It doesn't have to be the same 2 jobs.
Yeah, okay, I understand.
Yeah.
Yeah.
So if somebody was working at Walmart for 2 years, someone was working at Pizza Hut for 3 months, you can use Walmart, you know, but you're not gonna be able to use Pizza Hut.
Okay.
Now, but if Pizza Hut's paying more, you wanna use that one, you can maybe try and make it look like they're going full-time at Pizza Hut, putting Walmart as part-time now. So Pizza Hut's now their primary, but you can't use both, because they don't have the time.
Make it look like.
You can't make it look like they have the time. Oh, what?
No, you were like, you know, you can make it look like they're going to Pizza Hut full time.
Yeah.
Yeah.
I mean, they're paying more.
Yeah, that means that's the primary.
Look, you gotta take the data that someone's telling you and interpret it and put it into another. You got to, just because someone tells you, hey, I work at Walmart, it's my primary, and you think that's gonna be my primary and my 1003, doesn't mean that's how it works.
Yeah.
You can, it's up to you to design the application in a way that makes the loan work. Okay, and you to identify which one's the primary and tell the borrower that. Okay, you're the one telling them, and I'm not telling you when it comes to that type of stuff.
Yeah, there's a couple of things I want to talk about here real quick. I made a notice and list of some things. Do you mind if I bring these up?
It's fine.
Okay. I had sent this out on Sunday, and the subject line it was sent out to everyone said stay laser focused, reaching new heights. And you know, as we're expanding, we're evolving, we're adding more and more people. We're gonna have 5 more people starting from November. We're up to a 40 employee head count now. It's gonna get bigger and bigger, and more things are happening. So there's gonna be more mistakes, more opportunities, more production, more volume, more of everything. It's a good problem to have, but you still have to stay focused and make sure that we're doing things the right way. And we have to keep reinforcing things over and over and over because, you know, like it takes the average person, you know, 7 times just to repeat something, just to have it stick in your mind, you know. And to make a habit, it takes at least 21 days. So, you know, these things have to be reinforced over and over and over again. And so some of the things that I wanted to touch on real quick, you know, so what I'm seeing a lot of, and Josh, I don't know if you've already touched on this, but you know, some of the greatest companies, if you look at them, you know, what they've been able to accomplish, you look at, you know, people that grew up in Houston, Gallery Furniture, you know, being able to deliver furniture the same day delivery, right? Domino's Pizza will get your pizza to you in 30 minutes or less, or it's free. Over committing, over promising, over delivering. And for us, we have got to get more efficient with getting our loans closed faster. We should have a personal mission statement to close a local deal in an urban market within 2 weeks. It shouldn't take 2 months or 4 weeks or 6 weeks or 8 weeks. If the loan's packaged properly, the deal should close. If the credit, the income's there, and it's in a local market, we can get the appraisal done quickly, that loan should close within less than 2 weeks. You know, but there's certain things that have to happen to make that a reality. You know, and so for one thing where I've seen where loans are sitting a lot is when after the loan leaves the LO, it goes to the LOA, and it seems like there's a clog there before it gets into processing, right? And so, you know, the thing that we need to strive for is to make sure that once that contract comes in, who got a contract today? Who told? No, it was you. Who was I talking to about that?
I don't know. I got a contract.
No, Adrian. Where's Adrian at? Okay. Then your loan this morning, Adrian said, "Hey, you got the contract in today. That loan has to be in processing by Wednesday." You know what I mean? We can't have this like 2 weeks sitting here.
How do you, it's possible, but how do we do that?
That's what I'm saying. That's the whole thing.
Right.
This is a key thing. You have 3 days to get that loan in processing. We have to get to that point as a group collectively to fly that thing through to get into process.
You can't, hold on, this is the thing that you need to understand, and this is where we're trying to get on the front end of, is the goal that we're going towards is this goal. And it's, he's talking about 3 days, and I know that's, you know, I don't want you guys to freak out, but if you already have everything you need from the borrower by that time the contract comes in, that's totally doable, right? That is totally doable. And that's how any company is going to close a loan in 2 weeks, is because they're taking the workload. I closed a loan in 2 weeks is because you're taking the time that you're taking to get documents to a borrower after they're in contract, and you're taking that and you're moving that to the front before they go in contract.
I
Okay?
have a question. In processing, getting it into processing now, it seems like there's like more stuff required, like extra. Now that we have LOAs, like are the LOAs, do they know the checklist, I guess?
Yeah, they have a checklist. They have a checklist, but it's not like all inclusive.
Why not?
Why is that all inclusive?
Wouldn't that make processing a lot faster?
I can speak to that.
Go ahead.
I think a lot of it has to do if we don't have the information from the LO, then how do we put the scrub together for you? So a lot of it I think comes in, if you have a client and you know the story on, you know the 1003, then like for example, Danny knew his funds were closed from 401k. So he shot me an email and he was like, hey, I know like we're gonna need this addition to the scrub. I didn't talk to the borrower yet, but I know I can already put in my scrub because he already knows the information. But if I'm finding the information out on the back end when I'm doing the 1003, then that slows my process down because I have 8 questions I have to go through and like verify before, you know, I have to figure out now what form forms I need versus, you know, from someone up front who's already talked to them, who already knows that information. So I think the more that you're communicating the situation with me, I can put together a more solid scrub list to send out to the borrower, and we're not coming back 3 or 4 times to the borrower saying, hey, I need this, I need this, I need this. So I think that would help.
So, but so the takeaway right there is therefore to do what? There has to be some type of meeting with the LOA and the LO on per file, or should there be some type of log?
Yeah, I mean, we've talked about this, like we've talked about a couple of different like things to utilize to like make it more structured. But I really think it just comes in from the knowledge of the LOs. Like I have files that like I work with other LOs on, and it's you know, the transitions, I think it's like really clean. You know, I think with the ones where maybe I don't have the information and I'm finding it out afterwards and I'm telling the LO, hey, did you know this? Did you know this? Did you know this? It slows you down.
Did they know it?
I mean,
When you asked the LO, did they ever know that?
50% of the time. I mean, there's always something. I think
This is why we're addressing these things, because funds to close, most of the time, it's that most loan officers have no clue. And the loan officers that do are the ones that are getting their loans closed or pushing faster with less and getting them into the processing faster. Communication is a key part to y'all working together well, but it's being on top of your customer, knowing where the customer is, and there's not more requirements. So what additional requirements are you seeing, or what do you think, David?
Well, like last time I got one from you, whenever you scrubbed it, and it was like, we need like a letter for the spouse, I need a letter for rent-free, I need,
Yeah, the LOAs are doing that now.
the LOAs are?
Yeah.
Okay.
Up front.
Okay,
So their initial scrub
as long as I originally continue doing what we's supposed to do as far as the LOs, you know, getting bank statements, you know, pay stubs, things like that up front, you know, the original stuff, and then just letting her know or letting the LOA know the situation as far as do they rent, do they have money, where their money's coming from, things like that. Then, like she said, like Michelle said, they can get the other documents that are needed from you,
Right.
that they know of.
Right.
Okay.
Now, let me ask you this, and this is why this is the goal. This goal of closing a loan quickly is the reason why we're doing this. If Michelle's got the file a week ahead of the processor and she's sending them forms,
Yeah.
why would we wait to have the processor send them again?
No, absolutely.
It doesn't make any sense. In those particular forms. Now, I can tell you this, if a loan comes into me and the loan doesn't qualify, I will stip more out of that loan, okay, than I usually would. Because if I recognize in a file, and that's because I know that loan's gonna take tremendous effort to, you good? Oh, you can, no, you're, no, you're fine.
Call from your cell phone. Call from your
Sorry, man.
No, just go call from your cell phone.
Okay, so if a loan gets turned into me and the loan doesn't qualify the way it's submitted, right? And when I review that loan, and not as a way of like, I don't look at it as a way of punishment, but a way of development, is saying, okay, here's, I mean, this loan was like, you know, poorly structured, you know, and missing a lot of steps. This loan doesn't qualify the way it goes, and you want me to send it into a processor. What do you want them to do with it? And so my mentality is that, you know, hey, we need to fix the things that are a concern here. And I'm seeing some other concerns. So, like you had one file, McFadden.
Mm-hmm.
That one I stipped a little bit more, I think, because the guy's working for. There were some things that were drawn out to me. And that loan's fucking. You know, I mean, that loan's, you know, the guy's credit situation. You know, and if I gave that to Mike, Mike's got 30 files he's working on that are ready. What if I give him a file that's not ready? I can tell you what's going to happen is that you're going to see a bottleneck, a huge one. So if I mix in files that are ready with not ready files, and the process is supposed to fix it or just work on it, it's going to create a huge bottleneck because the amount of time he's going to have to spend working on that file is what we see with what happened with Side's processing unit. is where he's working on more projects.
Yeah.
You know what I'm saying? Like a Madrano.
Yeah.
Look at Vance Thomas, right? Those are examples of loans that, you know, we had better expectation. Well, mobile home, just forget about that one. But, you know, the funds to close it with this guy, you know, I talked to him, we talked to him, Sides talked to him. Those things drain our time allocation so much that we get behind.
Yeah, I mean, that's the thing is that we've had several conversations with loan officers, and I was like, like Josh said, what do you expect to happen if you turn a loan where the guy's is on workers' comp and hasn't even gone back to work yet, and he's been in processing for 3 months because we don't know when he's going to return back to work. And see, it's just like the expectation, understanding that that loan's not, of course, it's not going to close, you know. And then see, it's if the loan's not structured properly and it's not a real file, it's a fake loan, it's not going to close. That's a fake loan. That's not a real loan. You see, like a real loan, they close in 2 weeks. A real loan, unless we have in a rural area, there's an appraisal problem or there's something that's out of our control. There are some things that are out of our control. We've had an appraisal issue that we're trying to deal with in some of these remote areas.
Or like, he had a loan, the guy went to prison, was arrested, or is gonna go to prison, I don't know. I don't know.
Well, that sometimes can
Shit, that
happen,
happens.
but the thing is that for our, you know, areas where it's very urbanized, like Houston or Austin or Florida or Miami, you're not gonna really have an appraisal long-term time. But that goes back to origination, having massive frequency. That's a whole other training session, but because if you got hurt off of that one loan, your pipeline's not big enough. So that's a whole other topic. But the thing is, though, we've got to get better and faster. How we're going to increase market share and domination in the marketplace is efficiency, and we have to close these loans a lot faster. You guys, when those loans come into you, like, you know, to you guys, everyone's responsible. The loan officer, make sure, like Michelle said, you have a full file ready to go. And we have to create something there, maybe some type of meeting or some type of spreadsheet where these questions were asked and we know what the answers are. I thought the red light checklist would help with that.
It does, but it's a matter of applying it.
Applying it, right.
And, you know,
What happened with Asana?
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 it's there. I mean, we may reintroduce it, but the LOAs are getting adjusted to a couple things right now, so they may, because it works great at the LOA and LO level.
Yeah.
The processor is a little harder to integrate with, but the LOA and LO, that's a great tool. But the goal is that, you know, what these guys are doing, you might have had them come to you and say, what deals do you have coming in? They may have been on the aggressive side rather than your LOA, because they've been instructed to be proactive, to review files before they come into contract. Because at that point, it's too late.
And see, on that right there,
Right.
Couple of things, when you get the contract in, you need to make sure before, how do you get a loan in the process within 3 days? I mean, when the contract comes in, make sure you have the right close date, the right concessions. You know, someone's gotta be checking that. The loan officer has to be in touch with the realtor and the borrower to make sure that you have the right closing dates, the right concessions. You know, triple check the income and credit along the way. If you're giving a credit approval, even when the income comes in, you gotta check out the income to make sure that your loan's gonna work. You know, make sure you have all the documents in the file. If you wanna close loans in 2 weeks, it's possible. You gotta make sure that we have, you know, all these bank statements, bankruptcy papers, divorce decree, cash to close is verified. And then also, check out the property. I've seen so many loans come in where you guys didn't even check the property out, and it's a mobile home, or it's something we can't lend on. The property has to get approved too, not just the borrower. There's 2 approvals. So you have to go look up if you get a contract, then go online, look at the property. Hey man, this thing has a big barn, has a big hole right there. You know, how are we gonna do a loan on that? Someone showed me a property the other day, 180 acres with 2 barns that were dilapidated. And it's like, we can't lend on that, man.
Right, and
So-
condos is something you have to watch carefully too. Condo?
Huh?
Condo?
Yeah, condos, I mean, so you have to, The other thing is that, you know, huge thing that, you gotta, this is very important, man. Don't ever, ever, ever send out disclosures without going over them with the customer. The loan officer has to do that. You've got to go over the disclosure with the customer. And I made a video on that. You'll scare the hell out of somebody if you send them those disclosures and expect them to sign them. And half your deals are gonna be gone because they're gonna disappear. When they see finance charges of $700,000 and APR of 6%, and you quote them 3.5, they're gonna have a heart attack. Okay? They're gonna be like, what is Jason doing over there? And you'll never hear from him again. So don't ever send out disclosures without going over with them with the customer. You have to prepare them for what those things are and explain to them what they are. It's huge. There's all these little tiny things that go into becoming a master in what you're doing. It's not just one thing, it's a million nuances. And these are you know, huge things. On getting docs from a customer, you gotta copy the realtor on everything. And let them know the severity. They're gonna lose their earnest money if they don't get their act together. If we don't have everything in, they're gonna lose. They don't know what's going on. They don't know anything about a home loan.
Whose job is it to tell them that?
It's the loan officer. You guys are the professional, and the realtor needs to be copied, because here's what happens, and pretty much some of the more experienced loan officers can attest to this. If your deal doesn't close on time, who gets blamed? Yeah, huh?
Everyone.
Well, yeah. Oh, I end up, you know, Josh and I end up having to put out the fires, and so, you know, and I'm spending, you know, a third of my day now talking with irate realtors and customers because they don't know what's going on and the deal's not closing, you know, and so I don't have a problem to do that, but it's taken away from me running the company. You know, now I'm having to do a loan officer job and go over deals with them, and I'll do it to help, but I mean, that's why you're here, is to take care of that. And so, so yes, let them know the severity that they run the risk. You know, like here, for instance, on Romero, you need to let that seller know, we're not closing on the 16th.
Yeah, you're the most.
See? Because this guy didn't get his act together. He needs to be aware of that, because he's gonna blame you and think that you're a bad mortgage officer now. Remember what he told you when he came here? Let me see how good you are if I'm gonna give you another referral. So he's gonna think you missed the close date, and he's not gonna give you any more referrals.
You gotta be on the front end of that as a good loan officer. Like, you have to know what's going on with your deal. Like, if that borrower is dragging their feet, you gotta tattletale on them. Tattletale on to the builder, to the realtor. Because you want them on your side. Because when things go south, you want them to know it's because of him. You know, it's because of the borrower. You know what I'm saying?
Yeah, we're good at that, man.
Yeah, but in order to do that, you gotta be on the front end of it. You can't wait until if the borrower gets them first, you lost. You know what I'm saying? You guys understand what I'm talking about? The first one to the party, I guess, wins. I don't know. The first one in
You
wins.
know, one of the things what I want to do here in Houston, what I'm going to be doing on the radio, once we get our systems done, I want to go out there and market that we can close a loan in 2 weeks. You know, but obviously we've got to make sure that we have all of our operations, you know, in line in order to do that. I think we can do it in Houston.
We can do it.
You know, and so where if I go out there and I say, I can close your loan in 2 weeks or less, you know, I'm putting some type of strong, or I'll pay your closing costs, some type of strong pitch, you know, I gotta make sure that you guys can actually do that, because the phone calls are gonna go off the hook, you know, and if I go start putting billboards and do a bunch of radio and TV and all that, I gotta make sure that we can actually get that loan closed in 2 weeks, you know, and so, now that we have direct access to underwriting, and we have more support, and bringing in more support, that's where we need to be.
What would be the time frame on that?
What?
Because, you know, like, for example, if we do send in clean loans, right, and the processors have nothing but clean loans, they got assistance and everything, how quick is it if we get a clean loan in the processing before they submit?
Depends on, with some loans they get submitted within 2 or 3 days. Other loans it could take, you know, it depends on how busy they are and their workload. But the problem is that we gotta weed out the bad files. If he's spending a third of his day dealing with problems, okay? If the processors are spending a third of their days dealing with problems, that time could be spent on something else. It's being wasted, okay? And it's just because we have to get better at the way that we're doing things. You know, we have to get on the front. It should not get to that point, just because we're on the tail end of it. But I think that they should be able to have the files submitted relatively quickly. This is what I know. Is that, you know, absolute certainty is that we are capable of more than what we're doing now. Between all of us here, I think that we can put together something that make that happen. You know, there should be no, and that type of accomplishment is just a reflection of how great we are in our career. You know what I'm saying?
So to David's question, when we sent back McFadden, his file got rejected by processing. Obviously, we had to go and get more paperwork. When he got resubmitted, the day that we submitted him and Mike looked at the loan, Mike goes, I want to submit him today. Because he had everything that he needed, and he was like, I want to submit this file right now. And then there was like one thing that we couldn't do it that day that he got it, but I mean, it was submitted the next day. And I was just sitting there, I was like, really? I was like, you could submit this file, you just got it. But the file, we had all this documentation or everything that we needed, that he didn't need anything. He just wanted to submit it that day.
What do you think about that?
Yeah, well, if you have.
Oh, David, over here talking shit. Michelle gonna set you straight, boy.
I'm not trying to do that.
No.
I mean, no, but
There's
here's
just
the,
an example.
John's closed a couple files in 2 weeks, around 2 weeks or so. Nick closed one, or we got a CTC in 2 weeks. You know, it's definitely possible, but.
It is. He's doing USDA, but in the size unit there, he's a little bogged down right now, and I'm trying to get. The reason why I was like on McFadden, I was a little more complicated on that, is because he already, you know, like I said, he had more files to work on. But I wanted my goal, our goal, you know, is with that in mind. So if I'm rejecting a file, I'm keeping that goal in mind. That if it's not ready, it's the loan that's not ready. Why am I going to put it on the assembly line?
Why? The reason why I want to know is because I'd rather know, and me and Michelle know exactly what we need, because sometimes we'll send something in and, you know, this is missing, this is that's missing, and it goes to you, and then it comes back to us, and then it has to go back to you, and then it goes to a processor. You know what I mean?
Right.
So I would rather just be like, hey, we already know for sure the checklist is good, but there's so many different things because, you know, each borrower is different. So like a lot of those cases, that's kind of where I'm just like, well, if it's just one or two things, you know, can the processor just take care of it?
If it's things that don't impact the structure or the integrity of the loan, I don't have a problem with that.
Okay.
If they have to go revise a credit inquiry letter because it was messed up, I mean, I don't really have a problem with that.
Yeah.
Now,
Just like one or two things, you know. Nothing.
but you see, it's the trade-off is time.
Yeah.
So,
I mean, we're gonna do our best because we understand that we're not gonna send in nothing, but I just want to know it because that going back and forth that's what takes up a lot.
I know, and I don't want to review your files. And
Yeah.
there's a period where you were just sending them directly in.
Yeah.
And that's a special privilege.
Yeah.
And that's what I would prefer to have in place. So that way I don't have to, it's a waste of my time.
Yeah.
I don't enjoy
You
it.
understand why he's doing that, though,
Yeah.
right?
No. Absolutely.
I mean, and so this is all training so you can get better.
Yeah.
I mean, the thing is that, if you keep this up and we keep this concentrated focus, imagine how it's going to be in 2017 in November.
Yeah.
If you truly, stay, focused on this and keep refining it, all your loans that you package up should close in 2 weeks. 10 days.
If it's in a metro, it's not USDA.
Yeah,
USDA is not going to
if
close
it's
in
not
2 weeks.
it's not a funky deal, then it should and that's what one thing that one of the goals that I have is to bring more of the business locally. And so because I think that's going to help us a lot. I like the stuff all around the country and all that's good, but I want to do more local business too, because I think we'll have more control. And so I think we're kind of a little bit. We lose some of the control when stuff's all over, and either with title companies or with appraisers, or so that's one of the plans that we're shifting towards, is to bring more of the business here.
relatively new. So if you guys know what you're doing, like when I talked to John, he works with Michelle. I talked to him, and I was like, hey, how come you're gonna let Michelle or not have her do more of this stuff? He was like, well, she's new. I want her to get adjusted, and I was like, well, why do you keep such good tabs on what she's doing? Like, he knows everything she's doing and when she's doing it, and wherever he follows that. He's like, well, because she's new, I have to, I can't. It's like he's managing her rather than her managing him.
Yeah.
And she is an assistant. Her role is is not to be the one managing the loan officer. So the loan officer should manage their deal. And when the role gets reversed is where we have problems. That's where your deals drag through the mud. And that's where we identify where a loan officer's focus is on something else other than their business.
Yeah. I agree.
What's up, man?
So question, Josh, so, obviously I heard you guys, which is something I wanna do, as far as like being ahead of the curve. So like I have 2 clients that are actually, they submitted offers already. So would it make sense for me to go ahead and give my LOA or whoever on the side?
Yeah, if they're submitting like legit offers, yeah.
Okay.
So don't just send them in there.
No, I got 2 of them that, I've
Yeah.
already talked to the realtors.
Because the time, you have to have respect for one another's time.
And that's the reason I'm asking, because I don't wanna just say, hey, check out this file.
Right.
And they're working on files that are already like, oh, you know what I mean?
Right, yeah. No, that's fine. Yeah, we want to get ahead of the curve, and that's if it's submitting an offer, it's around that stage, you definitely want to give them a heads up. And what they'll do is they'll do a scrub of the file. Now, over time, Prisciliano and Tynard and Michelle, the things that the files are getting kicked back for, it's a learning tool. The same thing that happened to you, when you first started. So that's the thing is that sometimes those things, if you really are engaged in your job, you take that serious and you will improve. You know what I'm saying? Because when you're not engaged, you don't care, you just keep doing it. Okay, good talks. I want to go into assets. You want to take a break? Yeah, 5-minute break.
I got the best
Okay, good. Good, we're going to talk about this fast. It's very important.